And actually, on the day of the election, we did all right. We could go up to like 145, and the dollar really just went up in a straight line to the top of the range. But
Good. Well, for anybody that doesn't know, welcome Jason Sen, founder of Trade Day Ideas. I know you've been trading for the past 35 years, 12 years on life trading floor, since 1987, which is the London International Financial Futures and Options Exchange. You've had 3 years on the options market, market making when trading went digital, and then 5 years of derivative broking and with investment bank clients. 15 years providing technical analysis, 10 years trading Forex, and then 20 years teaching traders. So you have a vast experience. I'm very excited for this conversation. And yeah, I'm happy to have you on. I know Trent's told me a lot about you, and I'm excited for this conversation and to learn a little bit today.
Yeah, no, we talked about gold. We did a live show during that too, and my understanding of why gold dropped so much is because going into the election, there was so much uncertainty, and Donald Trump and Kamala Harris had polar opposite opinions on where they think the market should go and where they think the U.S. economy should go. And so I think you saw a lot of flight into that safe haven asset. And as soon as Trump got elected, I think a lot of people jumped out of that and jumped into Bitcoin, jumped back into the stock market. Before you jumped on, there was a stat that came out that $20 billion went back into the stock market over the last couple of days.
whoa, yeah, well, we can see that from the huge rally, and that was massive.
I saw over
I guess it was to be
all
expected if
assets. It
Trump
was
won.
it was it was 2 trillion over all assets, or it was over $1 trillion. I think it was 1.2 trillion over all assets, including crypto, indices, everything. Really crazy.
Well, then gold just jumped. What was it? $65 straight away. So it's like almost a V-shaped recovery. It caught me out. I'll be honest.
Uh, and I'm curious, going into news events like that, do you reduce your position size or try to sit on the sidelines? What is sort of your mentality going into some stuff where there's going to be volatility?
I'm a technical trader, so I'm not a good news trader. My edge comes from looking at charts and finding areas of confluence. So with an event like that, I will admit I'm pretty lost, and it's just not worth me getting involved. I don't have any edge, and then I'm just gambling on a news event, and yeah, not worth it for me. It's hard enough being a successful technical trader without trying to second guess the news.
Yeah, give it 2 seconds. We're gonna ping him. It looks like he cut out there.
Oh, we got him. All
I'm
right.
back, I think.
Yep.
Oh, you're
Don't know what
back.
happened there. Sorry, guys.
Yeah.
This,
No.
Davin's always saying we shouldn't do this live, and I feel like we should always do it live, but we work through the technical difficulties as a function of it.
Yeah, these are some of the issues of doing it live, but we're back. Internet isn't always on our favor, but we're back. So we were talking about.
So I just wanted to follow up on those questions. So is my understanding correct that you just stayed completely out of the markets until the election results, and then you jump back in and we're looking for some technical things, but maybe at a lower size than normal? Is that accurate?
Yeah, I personally, to be honest with you, I don't even trade that much these days. As you know, Trent, I'm an old man, and I've done my time in the markets. But I do, as you know, also provide signals and analysis for retail traders. So I am obliged to provide something for them. And actually, on the day of the election, we did all right because, for example, we bought cable around the low. That was purely because it was retesting a 13-year trend line that it had broken above. So just basic technical stuff, and it worked out all right in the end. We got where gold didn't work well for us at all, which was frustrating because there were some quite negative signals in gold the week before, so I was expecting it to drop, but we got caught out on the initial volatility. We tried to get short and then got stopped out before the market really collapsed, so that was frustrating. But that's what's going to happen over those kind of news events, and as I said earlier, that's why I really try and avoid them. My edge is in technical analysis, looking for areas of confluence. And on an event like that, I'm usually pretty lost.
And now you mentioned the cable broke a pretty big trend line. Where are you sort of projecting that goes now based on the technical analysis side of things?
We could go up to like 145 easily.
Oh,
I don't know
really?
the time. scale on that, but we've got a lot of support around 128.00 from that trend line and a 200-week moving average. We broke above the trend line, breaking above a 13-year trend line. It's a pretty big deal. But we came back to retest it, which is not uncommon. But these moves are taking a while to play out because this is what I'm looking at on the weekly chart. Normally, I'm a 4-hour chart guy, but in this case, I've got to look at the weekly chart because it's such a big long-term trend line. So yeah, I mean, as long as we hold above 128.00, cable could go to 145 next year.
So you're saying if I want to come to London again, I need to do it now and not wait? Otherwise, it's going to get a little
You
bit
got
more
it.
expensive.
Yeah,
Um,
try that if I'm right.
and I think you're unique. I'm generally curious about this. So you trade all asset classes, but you live in Thailand most of the year. How does living there impact your trading decisions? And do you have to wake up early? We had a gentleman, Blake Morrow, on a couple weeks ago, and he lives in Arizona and he trades U.S. Products primarily. So he's got to get up like 3 o'clock in the morning to actually trade the products that he normally does. Do you find yourself in that similar situation where you're doing off hours?
I'm actually lucky because when I used to live in Europe, when I used to provide my analysis, which probably around the time you and I were working together, a lot of it was for the banks. And so I had to have my stuff out by, say, 6 a.m. so that the guys could read it on their way in. And so when I was in the UK, I was getting up at 4 a.m. to get my work done. Now most of my clients are retail, and I can now have a nice lie in till 7, 8, or even later if I want to, because right now Thailand's 7 hours ahead of the UK, so it gives me a lot of time to get my analysis and my signals out, and I can, so by 10 o'clock in the morning I've done my 2 hours, and it's a really nice lifestyle. Don't have to get up early in the morning.
Nice, nice. And then I want Davin to ask you. I was before you jumped on, I was telling him how famous you are for being in a Hollywood movie. I would love for you to tell Davin that story because I think that's really interesting.
Yeah,
Not
what
many
movie?
people get that experience.
Well, you're being overly complimentary. I wasn't like starring in a Hollywood movie, but I did. There is a movie out. Actually, quite interesting time to ask me because there was a movie out called Rogue Trader, and it was about Nick Leeson who broke Barings Bank back around, I think it was 1995. At the time, it was a huge story. He was arrested in Frankfurt as he tried to flee Singapore. They took him back. He did some time. And Nick is actually a friend of mine. And funnily enough, I saw him about 2 weeks ago. We did like a roundtable podcast, and I hadn't seen him since before he went to jail. So it's good to catch up with him. And it's 30 next year. It's the 30-year anniversary of him breaking the bank and getting that title of Rogue Trader. So anyway, so there was a film made about him with Ewan McGregor as starring as Nick Leeson. And some of my, when they make a movie, they have like technical advisors to try and make the scenes look realistic.
Yeah.
So they had a couple of guys from the life floor that they'd hired to try and make the pit scenes look realistic. And they had a load of Asian extras in the pits, of course. And learning the hand signals is quite tough. And it didn't look authentic. So one of the guys came up to me on the floor and said, "Hey, we need you to be on this set. We need someone to be executing the stop loss orders and that kind of thing and make it look real." So I thought, hey, that sounds like fun. So I ended up being in some of the pit scenes and doing some of the bigger trades.
So
Nice.
that's something you mentioned with the hand signals that I think is interesting, that most people these days have no idea what you're talking about. Can
Yeah.
you just tell what to everybody that's listening that's probably like,
Yeah.
I was the first class in the prop firm that I traded for that did not go to the pits. So if you're basically
Okay.
40 years old or younger, you don't know what the pits are because you probably never traded at them.
I mean, I've seen it
Yeah.
in
Now I've
movies,
got my
but
video camera on, but you haven't got my video, have you?
I can pull up if you want to share your screen. I could pull that up.
Okay. I've got my camera on. I can show you if you like a couple of hand signals.
Yeah, we would love to see them.
Oh, we see your camera. Yeah, we have your camera on. We can see you.
Got me. Okay. So on the floor, you did the price out. Let me do that. The price was out in front of your face. So if you were 54 bid, that's pretty basic, 54. And then if you were 56 offered, you'd be 5-6. So 1,
Gotcha.
2, 3, 4, 5 was up, and then when you went to the side, it was 6, 7, 8, 9, 10.
Okay.
So price was out in front of you, pretty simple. 100 you did on your arm like this, 200, 300, 400, 500. So that was your that was the price. And then the size was done on your face. So if I was 52 bid for 25 contracts, that's what I would be doing in the pit, but I'd be doing it a lot faster.
And who's looking at that? Like who
So
you two?
I was the market maker and I was in the middle of the pit. I was trading like my own account. I was an options market maker on the floor for about just over 10 years. And then the brokers would stand around the edge of the pit. Our pits were hexagonal, which I think is the same as, I mean, our floor was based on the Chicago floor, I'm sure. So we had these hexagonal pits. Our pits were a lot smaller. And the brokers would stand around the outside, and the brokers would be taking orders from their booths. So around the edge of the floor, there would be the booths that the brokerage companies would occupy. So there would be a phone broker, and he'd be talking to the customer. So the customer might say, "What's the size of the Bund, for example, the German bond contract?" So the phone broker would catch the attention of his Bund broker, and he'd say, "What's the size?" So let's say it was 52 bid at 3. So the guy on the edge of the trading pit would be showing this 2-3, 2-3, 2-3. And so the guy would know, okay, it's 52 bid at 3. And he goes, size. So I don't know. Let's say it was there in 500. So he'd show on his hand 500, 500 bid for 500, offered in 500. So the phone broker would then immediately know the price and the size. And then his client might say, okay, sell me 250. So the phone broker would wave at his guy and he'd say, he'd do that, sell 250. And then the guy on the edge of the pit would have this order. He would turn around, go into the pit, and he would trade with the market makers or sometimes the brokers, and he would break the order up. So let's say he might decide to break it up in 5 pieces to make it easy. He would say, sell you 50, sell you 50, sell you 50, sell you 50. He'd go around the pit showing that he's selling 50 to each trader. It would then be written on a piece of card. I sold 50 to this guy, 50 to this guy, 50 to this guy. And then the clerk would come around, pick up the card and put it into the exchange system so that the trades could be matched through the exchange system. That's how you
Did
executed a
you?
trader. That's
I'm
analog
curious.
trading for you.
How did you learn technical analysis after the pits, or were you able to apply any of that skill set while in the pits?
No, I was aware of it. I think guys on the floor use pivot points because they're purely mathematical. You can work them out with a calculator or even in your head. But technical analysis, you require a screen. So we didn't really do that. I was kind of getting into it towards the end of the days of the floor, but we just didn't have the systems in order to look at it. And then I started reading books when the floor shut. I did okay as an options market maker, and then I went on screen and traded options, and that was actually quite an easy transition for me because instead of doing all the maths in your head, you can imagine you're on the floor. Let's say you buy 250 call spreads. You've got to work out the gammas and the deltas in your head. You've got to hedge the deltas as quickly as possible. You haven't got time to get a calculator out. The markets are moving, so you're quickly and estimating the deltas, and then you're sending the order into the futures pit from the options pit, getting your hedge done. So my maths was pretty good. I mean, you had to have pretty good maths. But then as soon as you got on the screen, you do a trade on screen and bang, your gammas, your thetas, your deltas, all the Greeks are worked out for you. And like, wow, this is fantastic. I don't need to do maths anymore. So that wasn't a difficult transition for me. But then after a while, I decided I didn't want to trade options anymore because you're just married to a position permanently. You go on holiday, you're spending your whole life on the phone, finding out what's going on. Where's the skew? Where's vol? Blah, blah, blah. So I decided to try and get into trading futures, which I thought would be easy because I've been an options trader for 15 years and options are supposed to be more complex than futures. But I soon realized when I dropped £30,000 in about 2 or 3 months that I had no idea what I was doing. It's a completely different skill set. And then I realized, okay, I have no idea what I'm doing. I knew how to have an edge in options, but I've no idea how to get an edge in futures. So that led me to learn technical analysis to try and figure out how I could get an edge in the market.
The first prop firm that I traded for in Chicago, they put you through a rigorous amount of tests. One of those tests is a math test where you sit down, and I vividly remember it. You have 2 minutes to answer 25 multiplication questions to the decimal. So imagine like 25.2 times 56.7.
Oh,
And you have no calculator, and you just have a
jeez.
pen and paper, and you have 2 minutes, and you have to get 23 out of 25 correct to even get a job. And if you don't, you're fired or like let go on the spot. And so I get 23 out of 25 right on there, barely pass. And
Wow, well
then
done. I wouldn't have done that.
thankfully you get the job, but they sit you down in like the first week, part of that testing and some of their psychology testing you go through, and then some of the additional ones they run you through. They determine out of the gate, are you going to be an options trader or a futures trader? And they're like, they looked at me like, your math sucks. You're a futures trader. Because if you're to your point, if you're not good at math, you cannot do options, especially not back then.
Wow.
Yeah. Well, to be honest, I was an options trader for 15 years and I did all right. And I don't think I'd have passed that. I know I wouldn't have passed that test, to be fair.
Yeah, they wanted to see how the pressure. I remember just studying. I knew the test was coming because I had a couple brothers that traded for the firm, and so I knew it was coming. And all I did for a month straight was just sit there and do multiplication in my head
Very
as
good.
fast
Very
as I
good.
could.
Very good.
So we
Yeah.
do have a question here from somebody in our chat here. Trade for Best says, a question to the guest: where do you think the DXY will go in front of the stage in the EEUU?
So where's the dollar index going to go in front of the EU?
So you're talking about the euro US dollar pair?
I think he's talking about the dollar index, and then I think he's talking about with things that are going on in Europe. I
Oh, I
believe
see. Okay.
maybe he can clarify.
Well, I'm not sure about how government, how, how policy, government policy, whether that be in the US or the UK, could affect the pair. But I know that look, how could affect the dollar index. But I know that the dollar index has been stuck in this pretty wide channel for about, I think it's like 2 or 3 years. I don't like that kind of price action. I don't do well in sideways action. It's too random. It's too erratic. I'm a trend follower, so gold has been amazing for me, but the dollar has been a real struggle, I will admit. And now, that back in October, I think it was beginning of October, the dollar reached the bottom of that range, and I was thinking we're going to break out here, but it didn't. It turned around and reversed. I believe, well, my theory is anyway that there were a lot of speculative shorts at the time in the US dollar, and then of course we had stronger than expected employment numbers, and the dollar really just went up in a straight line to the top of the range. But yesterday, literally yesterday, it continued. It tested the upper end of that 2-year range. If you've got a dollar index chart, it's as clear as day for anyone who wants to look at it. You just join a trend line from the recent 3 or 4 peaks, and the same join the trend line for the recent 3 or 4 lows. And over the last, I'm pretty sure it goes back to 2022. There you go. You're doing it now.
Yeah, so I pull it up.
Clear as day. Yeah, great. If you get on a weekly chart, you should be able to see that channel pretty clearly, or even a monthly chart. And there you go. You've got it. And we tested the upper end. We tested the upper trend line that I have on my chart going back a couple of years. And
pulled it up
we've
on
just
the screen.
reversed from there. So it's just basic technical analysis. We're stuck in a channel. We've tested the upper end of that channel, and we reversed. So the question is, do we keep going down at least to the middle of the channel? That would be expected. We could go down to the lower end of the channel as well. I guess we'll need some impetus for that to happen. But the Fed just cut rates, so that probably that could help some weakening of the dollar. And I guess now it's down to inflation and non-farm payroll numbers going into the end of the year. But if we break above, what I want to see is a break above that upper trend line of that channel, and then I might have a trend to jump on, and then it's easy for me. Jump into the dollar and just try and sit my hands and leave it.
So if we break above there, if we're looking at this weekly chart, are you looking for it to go all the way back up to these highs back in 03, which would be like around 120, 121?
Sure, why not? We could do. We've gone sideways for so long now that if we break, I think we're going to have a good move, and it could be quite a quick one too. Anyone who trades the dollar is well aware of this situation, and everyone's going to be ready to jump on the trend. We'll probably get a couple of false breaks because it's such a big, obvious channel. So we'll probably get a couple of false breaks to fool people, and then we'll probably go. I'm just guessing, but that's kind of the way these things usually work.
Are there any specific, I guess I have two questions. Do you use candlesticks for your charting, or do you use line charts or bar charts? And then if you use candlesticks or bar charts, are there any sort of patterns that you specifically look for that help to drive your decision making more than others?
Yeah, sure. I do use candles. I think pretty much everyone does these days. It just gives you that little bit of visual information. Um, I I guess my favorite candle that I rely on a lot is the bearish engulfing candle or the bullish engulfing candle. That one seems to work more often than not. I couldn't give you a statistic on that, but for example, we had.
Here's what that pattern would look like in terms of a bearish engulfing candle.
I'm back.
He's back.
Yeah.
He's back.
If you have, if Trent, if you can get the gold chart, the daily chart up,
Yes, of course.
you'll see the bearish engulfing candle right on the all-time high last week. This is how reliable this signal can be. I'm not saying it's 100%, but when I saw it, I just felt that, yeah, there you go. We made a new all-time high. I think it was on Thursday last week, exactly a week ago. It was just fractionally above above Wednesday's high, and then we collapsed. We took out Wednesday's and Thursday's price action. We also closed below the previous all-time high, which was I think at 27.58, and that was the peak of a bearish engulfing candle that had happened the week before that. So we kind of had two bearish engulfing candles. By the time we had the second one, I was like thinking, okay, this is actually a warning. And I would never normally trade against the trend, but for some reason, I just felt that this was a signal I needed to pay attention to. And of course, we did come down. But I mean, the main trigger for that big drop, of course, on when was it? Yeah. Well, on the election result, we've already discussed it. So that was a bit of a help from the Trump win. But certainly, well, you know, the evidence is there. The bearish engulfing candle worked, and we had a very significant drop in gold.
And I'm curious, do you typically look at longer time frames these days, or do you still dip into like the 1 minute and 5 minute charts as well?
No, I don't really trust the signals on those. I'm not a scalper. Those time frames really are for scalpers who want to be in and out for a few pips, which is fair enough. But I'm too old to do that. I'm not quick enough. So I'm a swing trader. My chart, my go-to chart is the 4 hour. I will look at the 1 hour as well, especially if there's only a short-term trend to focus on. But the 4 is my favorite.
You kind of said you started your trading career on the trading floor in London. How exactly, like, what made you get into trading? What was like the life event or turning point that made you decide I want to become a trader, and that made you apply or become a
Okay.
trader?
Yeah, good question. Well, like all kids, I wanted to make money. I wanted a flashy car and that
Mhm.
kind of thing. But the main influence was my father. He was probably like one of the original day traders. He got into trading in the early 80s, uh, trading stocks and trading indices. And of course, in those days, you didn't have, well, we didn't even have computers. So he would sit in a room with a phone, and he would draw charts on graph paper. So he was the first person to introduce me to technical analysis, would you believe? He'd get A4 graph paper and he'd chart the FTSE, and he'd literally put a bar on there every day. And then he'd build these massive charts all the way across the wall. So I'd go into his office and see these things on the wall and say, "What is this data?" It's the FTSE index, and then he taught me about RSI and a few of the indicators. And of course, yeah, as I say, there was no live stream. When you wanted to execute an order, this is real analog trading. He would phone up the broker in London. Hey, what's the FTSE doing? What are these stocks doing? They'd give him the price. He'd put them on the chart. He'd call them every, I don't know, say 30 minutes. And then he'd give his orders in. And he was trading quite big. So he actually got through to the institutional desk. And also, he would drive me to school every day and listen to financial news channels. So I was kind of getting to understand financial markets, just a basic understanding, just from listening to the radio, going to school, and seeing what he did. And so that just triggered me. I thought, this is for me. I'm going to give it a go.
Nice. Nice. Yeah. My next question was, what do you think the most important element to becoming a successful trader is? But I see somebody in the chat already asked, what advice would you give to a new trader? I think they kind of go hand in hand. So yeah, what do you think is the most important, or what do you think the biggest piece of advice you can give to a new trader is?
I would say the single most important thing for a new trader, and I speak to a lot of traders, I teach a lot of traders, and I talk to a lot of traders, new traders. The single biggest thing is to use a stop loss. It's so obvious, but it's incredible how many people don't do it. They get into a trade and they think, okay, I'll just see how it goes. And once they do that, they're paralyzed. They're often paralyzed not only in knowing when to cut the loss, but sometimes in even knowing when to take the profit. Greed overtakes them, and they just can't get out on the upside as well. But I've seen so many traders ruined by just not knowing where they're going to exit the trade before they even get into it. And I've met people who have lost, I've met so many people who've come to me and said, Jason, please help me. I've lost 100 grand, 150, 250. I met a guy the other day who's lost 500 grand. Not a wealthy guy, not a guy who can afford to lose that kind of money. And, it crushes me to meet these people.
Yeah, no, that's a great piece of advice, though. Setting stop losses, to piggyback off what he was saying, it's I've seen it a lot too. Having the luxury of sitting on the brokerage side, I get to see, over my years, tens of thousands of traders, and I would say most people don't put stop losses in.
You've seen that yourself. You've had that experience.
Yeah. So on the brokerage side, I got access to everybody's trades. And then obviously on the tech side, I can see the trades coming through as well. And I would say, to your point, the vast majority of people don't put stop losses in. And I know when we were working on the prop side, on the retail prop side that sort of popped up here in the last couple of years, one of the rules that a lot of firms tried to implement was you had to put a stop loss on your trade. Otherwise, it would go close your trade. And people complained so much. All the retail people like, don't do this. I don't want to put stop loss. I don't like this, blah, blah. And so eventually all those prop firms ended up removing the need to go put a stop loss on, which is unfortunate.
Wow. That's really interesting. Obviously, I didn't know that. So you've really had firsthand experience of looking at so many different accounts, and people just, I don't know what it is. Well, I do know what it is. People cannot face taking a loss. When they get into a trade, they can't face the fact that the trade might lose. No one gets into a trade thinking that the trade might lose. And so they think, well, I'll just deal with it when it happens. And of course, if you've done that, then you've no idea where you're going to get out, and you will run it way further than you would have otherwise done if you just used a bit of logic and said, okay, if it goes here, I know I'm wrong. I'm prepared to lose X amount, and then I'm out, and then I move on to the next trade, which will hopefully be a profitable opportunity. But they end up it's not only the loss that they take, it's the opportunity cost of not making profits on other trades while you're nursing that loss for longer than you should do. It's just, and it obviously messes up your head. You lose your confidence. You don't have the confidence you should have when you enter the next trade. It has a huge knock-on effect. I mean, this takes me on to trading psychology, which is something that's mega important, but it's a huge topic.
Yeah, no, that's very, very true words there. We started doing a video series here, just joking around. We sort of like to have some fun here now that we don't take trading quite as seriously. But I did a series like what really grinds my gears, and it was literally on that topic of traders not taking responsibility for their own actions. It's like they just don't want to face the realities of like, hey, you're in a shitty position, you are losing money, you need to make a decision. Are you going to stick into it or get it out? If you're going to stay in it, where will you eventually cut that loss? And too many people just can't accept reality when it comes to the markets.
No. And it's brutal when it goes wrong. We've all had it. I'm not denying that. I used to trade without a stop loss, and the mental turmoil, the sleepless nights, you're down way more money than you should do. You're dreaming about the trades. It's a horrible experience, and there is no need to go through that.
We always call it it turns into the hope trade. You're like, I hope this goes up. Otherwise I'm
Exactly.
screwed. It's like, you should never
Or the
be in a hope
investment
trade.
trade. It turns into, or it's an investment trade. It turns into a long-term investment.
Yeah. Davin, I saw another question. I don't know if you want to do that.
Yeah.
It's a little on the fundamentals again, but
yeah, another question on fundamentals, and that's regarding the BRICS scenario, which is very obvious. He said it's very obvious that they want to fight against the dollar. What do you think is possible reception if the DXY reaches 98? Sorry.
So what if the dollar index goes to $98 in a BRICS scenario?
Thanks for the translation, Trent.
Sorry, we have traders from around the world. So we have over 30,000 people that are in our system now, and so we have traders from every country. So English is not always the first language.
I see. If you're asking me whether it could go to 98, sure, anything could happen. I mean, I think the whole BRICS situation is such a long-term effect. It would be extremely slow. And I'll be honest with you, it's not something I've contemplated because being a short-term day trader, it's not a macroeconomic or a geopolitical factor in what I do. So yeah, the honest truth is I'm not the best person to ask about that.
Yeah, I mean, I just pulled up the dollar index chart too. I mean, you're going back all the way to 2022 to go see 90. it would have to
Yeah.
go to the downside of that trend. I know you said you're looking more towards the upside if it breaks out, but if it comes out of that channel and breaks to the downside, that sort of would be the next area of resistance from what I'm sort of seeing here.
Okay. Yeah. Well, I'd just love to see a break. I don't care whether it's up or down. I just want it to move so I can try and jump on a trend.
I like it. Do you find that challenging, having to sit on your hands a lot?
Well, I counteract that by I can look at 30 pairs in a day to try and find an opportunity. So there will be opportunities somewhere. And I can trade a sideways market. I just find it more difficult.
Yeah, which is it's funny coming from like a professional trader that's done this for 35 years, doing that because I would say most retail traders try to find sideways markets because they want to sit there and do mean reversion strategies. They're always looking to fade the markets. If they start moving, they're looking to go the opposite direction, which is funny that it's retail does that, and then professional trader like yourself, it's like, oh, wait till it breaks out of that. Did we lose him again?
Yeah, it looks like it.
So test for best.
Yeah.
Hopefully that answers your question. Sorry, we got him back.
I was just going to add that, yeah, you're right. I think new traders, when they come in, they basically, most of them try a scalping strategy anyway, which I think is a great way to learn because it's an intense way of getting involved in the markets. Swing trading obviously requires less involvement. So I think that's a good thing to do when you first start.
Okay. Yeah, that's good. I always felt like I was a volatility chaser when I was trading. And I felt like at the end of the day, I was so just mentally drained, like more than working out or doing anything else. You like come home, you just like crash after like 10 hours of trading. You're like, this is the most mentally draining thing
Yeah,
ever.
for sure. Definitely it is. It's intense. It's not a lot of people that come to me, are like, hey, I'm looking for a mentor. I've been scalping for 3 or 4 months and I just can't keep it up. And I'm like, I need to move to a swing trade strategy. But as I say, I think it's a good thing to do to start.
Yeah, no, great advice. Do you have any other advice you want to give before we let you go? We've been taking a lot of your time. Anything else you want to say to the audience, to the 30,000 users out there?
No, I'm enjoying the chat. I would say that you you can be the best technical analyst in the world, but until you master yourself and until you understand, until you create a process for your trading strategy so that you become robotic and remove the emotion, you're not going to have long-term success. And I've been getting more and more involved in the psychological side of things as I teach people, and it's just fascinating how we self-sabotage ourselves. It's unbelievable how we just cannot keep control of ourselves when we're in a trading situation. So I would really, really work on that.
Yeah, no, that's great advice. And for those people that want to follow you online, where can they find you at?
I've got a YouTube channel, which is YouTube. Well, the day trade ideas is the handle. My website's easy to find. Just Google my name, Jason Sen, Sen. I've got a Twitter. I'm on most of the social media. There you go. You've got my website up. Thanks so much.
Yeah, so day trade
My
ideas.
Twitter channel is Day Trade Ideas. That's the one. Yeah.
Perfect.
I've got all my social media links and my contact. I've actually got all my personal contact details on my website, which I don't think anyone else does. So I do say to people, just contact me. If I can help you, contact me if you've got a question about trading.
Yeah, I would say I speak to a lot of trading educators and professional traders, and I would say nobody puts their Skype handle on their website. I'd say that's the first person you're the first person I've ever seen do that. People are so
Well, actually, if
worried.
you go to my contact page, I've even got my WhatsApp and I've got my personal phone number on there. And people do contact me.
Wow.
They're like, is this actually Jason Sen? They think they're going to get like a robot or a sales guy, but I actually do answer people. So
You don't get any spam?
there you go.
Yeah. So WhatsApp, if you want to WhatsApp Jason after this, he's unbelievable. I've known him for a number of years. Very, very knowledgeable about trading. I'm happy you came on. Thanks for setting it up. I know I bug you a lot to come on the show, but you were definitely one of the first people I wanted on the show. So thank you again for coming on.
Thank you so much. I appreciate it. I learned a
Thanks,
lot
guys.
and
I
I
really
enjoyed the
enjoyed it.
conversation.
Thank you. And it's always good to catch up with you, Trent, anyway. So we always stay in touch, don't we, mate?
Yeah, sorry, I missed you in London. The wife was on me to have some family time, and she's like, "You can't turn this into a business trip."
Yeah, no worries. I get it.
All right. Well, it's been great speaking with you, Jason. I'm sure we'll have you on another time in the future, and I can't wait for that. I hope you have a great
Thank
day,
you.
rest of your day.
Thank you so much. I do hope so. Cheers, guys. I really enjoyed it.
Cheers.
All right,
Bye bye.
thanks, Jason.